Good morning. I was just checking out my weekly newspaper, and we are again in the midst of a controversy regarding US Fed hiking interest rates. And that was a statement made on Friday evening by the Fed chief that she is quite okay about raising the interest rate by end of this year. So market can take negative cues out of this kind of statement. Not that this is a very unnerving situation. Market has negotiated this news so many times, and to that extent I would say that substantially discounted. But the effect of interest rate hike, what the fund flow will happen is something which has to be understood over the time. Nevertheless, we are technically jammed in terms of movement upwards. Until this point of time, there seems to be lower top formations on technical charts. So that be so, the market will tend to sell off at every rise, or may trade lower if it starts trading below 7,800. For now, I think 8050, that old resistance area, still holds good, and we could possibly see some kind of corrective actions below 7,900 futures Nifty. So, well defined and best defined as a trading range. Sell on rise and buy on dips, that's a strategy one should adopt. And this is purely for the trader's point of view. I'm not making any kind of statement regarding the fundamental valuations and the kind of opportunities that might come up in terms of investments. And essentially, that is more important than trading. Trading is for the regular guys who wants to play the market. That's all about it. You can lose, you can win. So if strategically one should keep some puts in hand, maybe 7,800 puts or even 7,700 puts, which can come to use some point of time. And assuming that the market ignores this and moves up from Monday onwards in the October series, I would still say that the cheaper priced puts should be there as an overnight strategy while you are playing the market on an intraday basis, which means the put has to be carried forward, and intraday you could always jolly well buy some kind of Nifty and sell it on the high side and things like that. So intraday techniques on the long side can always happen, but maintaining puts would be in order. That should be the strategy as far as Nifty is concerned. Bank Nifty similarly, movement beyond let's say the paper had mentioned something, let me just recheck that. Okay, current resistances are about 17,400, followed by 650, followed by 850. I don't understand why there will be major sell-off in bank. Reasons that they might not be able to go up, but major reasons to get it sold. Except I think on the intraday basis, as I looked at the charts of Yes Bank, while that's trading weak, IndusInd Bank is trading strong. So maybe a hedge between buying IndusInd Bank and sell Yes Bank future could be some strategy which might work. Now let's look at the strategy in terms of stop losses. Yes Bank is about 730 types. Any short on Yes Bank will have to be covered once it starts trading above 755. Suppose Yes Bank goes up and fails to not move above 770, then on the higher side, a short on Yes Bank with the stop of 785 will be in order. So when you are hedging that by buying IndusInd Bank on dips or on a running momentum. I think there are evidences of IndusInd Bank moving up from here. But to hedge that transaction, you could go short on Yes Bank and clear up the positions once Yes Bank is trading above 770 by closing. So that is one part of the story. Having sold Yes Bank, possibly the area to cover would be somewhere between 670, 680 on the lower side. What is not going to move up in a hurry would be Bharat Forge and SKS Micro. There's a kind of a pattern breakdown in this particular two stocks, two futures, and inability to quickly rebound. The Volkswagen auto issue will continue to haunt exporters to Europe. Bharat Forge happens to be that, one of them. So fundamentally, the Volkswagen issue is going to have negative impact on Bharat Forge going forward. And 20-30 rupees rise in Bharat Forge should be ignored and should be sold into. That should be a strategy for Bharat Forge. So let's assume that Bharat Forge is at 900 rupees levels, okay? It might move up one day to let's say 930, 40. Don't ignore that movement and go short on that. We cannot buy Bharat Forge unless it starts closing above 965. So that be so. So that's the range resistance for Bharat Forge. I'm just discussing there are some trading ideas. We'll definitely give you some inputs regarding some delivery buys which can possibly happen at this point of time, because chartically speaking they are on a buy mode, and fundamentally I've always liked those stocks. So we'll discuss those just a couple of minutes later, but trying to give you some ideas about trading the futures. So while a Yes Bank and a hedge of IndusInd Bank may work in favor, the timing of the hedge is important, that where you buy one and where you sell the other. So I'm looking for that kind of timing for buying IndusInd Bank and selling Yes Bank. Now, Monday morning you can initiate both the trades and wait for things to develop over 2-3 days time. Now, when we talk about hedge, the strategy comes into place. That strategy of timing. So I was going to have a one-day workshop on futures and options on 4th of October. I'm not going to have that workshop for two reasons. One is that there aren't very many takers of this workshop. That means students are really not interested about futures and options strategies. But at the same time, there are traders who will be interested. I've got inquiries for about 4-5 people. So I'm not going to do any class or workshop with 4-5 people. As it is supposed to be a very expensive workshop. I just thought for the common people and priced it so that I could get 30-40 students. that has not been understood. So I am going to have this workshop strategy, but this will be very premium workshop, maybe a batch size of max 10, and nothing is going to cost less than 5,000 bucks. And maybe this will be in a one-to-one kind of a relationship workshop, not a general kind of workshop. So I'll announce about that later. Coming back to the timing of the strategy of Yes Bank and IndusInd Bank, it's like they say, Monday is weak, bank is falling, so you are going short on Yes Bank, but you are not buying IndusInd Bank at that point of time. Then at some point of time you cover Yes Bank and you wait, market again goes up and all that. Don't buy IndusInd Bank and don't buy Yes Bank. Wait for the market to go up. Again, short Yes Bank at some point of time. This is the time you are going to buy the IndusInd Bank. Or the alternative to this is that while you are shorting Yes Bank, you are not buying IndusInd Bank, but when you are covering Yes Bank, you are covering not Yes Bank, you are buying IndusInd Bank, and that's where the hedge starts. So that from that point of time, what will happen is that Yes Bank will not move up fast, but IndusInd Bank will move up fast. So you are keeping that point of time a short sold position in Yes Bank and keeping a long position in IndusInd Bank. And I think that strategy is going to work out better. Now that's you can initiate with call and puts. As I was saying, that technology seems to be in a bit of bullish wicket, technology stocks. So while Mindtree has really moved up quite a bit and would have close to about 15, 16, this is in the future. There is evidence of big resistance at 1600 zone, and we are only 40 rupees lower than that. So sticking out your neck and buying in a Mindtree future is not desirable. But what is desirable to buy a Mindtree future is in the event that it goes for a dip, then we can buy Mindtree, and maybe I would say somewhere around 15.10, 15.20 we should be buying Mindtree futures, and maybe keeping a stop of 14.90. Now the question is that suppose it gets resistance at 1600. So you could also say that if the resistance is actually happening, then we might sell Mindtree future and keep a stop loss above 1605. That's just to say that there is a resistance, and that's just to say that this resistance is valid. So if you see that that is a valid resistance, you can go short on Mindtree future. But essentially technology is to be bought, and Wipro could be a long futures at this point of time, and it's roughly closed above 600 rupees level. So I think we can initiate long positions in Wipro. Not that I like the stock anyway, but then technical charting suggests that one can buy Wipro. Now the stop should be bit about 585, the futures segment, and let's see whether the run happens. And it's in the early stage of the run, and the run can happen about 50-60 rupees higher from here. So there's an opportunity to make money. You have to obviously sell on rise for the simple reason that the market is in a nervous mode, and you will find dips. You will find dips. So there's no sanctity over the fact that you will not get dips, and the dips to be bought in Wipro. So we were talking about Nifty. We have spoken about Bank Nifty. We have spoken about Yes Bank and IndusInd Bank, and now we spoke about Mindtree and Wipro. So basically you have two indices to play around, and two banking stocks to play around and two technology stocks to play around. On the technology part, my suggestion is it should be on a long strategy. This is at the same time, pharma stocks are also showing signs of good up move or reasonably good up move or at least bullish moves to come around, and that could be a Aurobindo Pharma, that could be a Wockhardt, that could be a Marksons, that could be a Granules, that could be a Jubilant Life Science, and then a host of others like Newpid and things like that. So pharma, and well, that also suggests one thing, that pharma going up necessarily means that the main market may not now perform because you have started getting bullish ideas in defensive sector. So once you have the bullish ideas, what will happen typically is that it will be followed by the FMCG sector some point of time during the week. Because when you are generally nervous of the market, you tend to be in the defensive sector. So that could be a play, the FMCG, but I'm not looking at FMCG right now, I'm looking at more pharma because that makes sense. So I would be looking at a couple of stocks in the pharma, and technical levels of those stocks I'm going to show you through charts as to why you should be playing bullish. A quick recap of what I said last week in the program. And I think you have got certain returns watching the program in terms of buying, selling 7,800 put, and also buying puts, and also buying yes bank, interest in bank on retracements. There's a couple of questions. Deep Mukherjee has asked about any fundamental issues in KRBL. What is your advice? See, it's a rice exporting company of basmati rice. So there are trade pacts with Iran on the barter system, and then there are issues regarding use of fertilizers. And all taken together, the demand pattern will be always good. So KRBL should be fundamentally okay. It has run up quite a bit and can correct, and that should not be taken into any kind of fear factor. Yes, there are issues regarding the agro-based commodity companies where certain kind of ban and certain kind of embargoes are put up by various countries from time to time, and that makes the stocks react here and there. So, but fundamentally it's a good company, and I think on retracements it can be bought. Papia Chakravarti has asked about whether I will hold SBI, ICICI, Hindalco since June 15, what to do. Now this is very strange. If you are watching YouTube and if you are reading my newspapers and things like that, I think for the last 1 year I've been against any kind of metal stocks, including Tisco, Hindalco, Sterlite and all. And I have never been ever bullish on the State Bank or ICICI Bank. So when you ask these questions, I wonder whether you actually watch the program or trying to possibly find out whether I'm changing my mind. State Bank, nothing is going to happen. ICICI Bank also similarly, nothing is going to happen in a hurry. Yes, Hindalco would have by this point of time, factored in all kinds of global commodity metal-oriented problems, including China. But then that doesn't make it a case for holding the stock for a very simple reason that the upsides are not there. And when a stock doesn't have an upside, the only thing you can do is that if there are upsides in a couple of trading sessions, you're only required to sell that stock. Hindalco will not perform, and I think give a 2 years time frame, it's not going to perform. The metals are not going to perform in a 2 years time frame. And that's the logic of the metal industry as such, and any kind of a lot of people were telling me about DLF and EV at some points of time that the worst is over and we should look up. Now it's not going to look up in the next 2 years' time also, as far as my understanding on properties are concerned. It's a concept of that too much of properties have got developed in anticipation of a demand, and the demand is not coming. So you have landed up with huge inventory. The promoters cartel is not reducing the price, and even if they sell 2-3 flats a month, they're more than happy because they make huge amount of money. So flat which you buy at 4,000 rupees square feet, it doesn't cost them more than 2,000 rupees square feet. So they're trying to work on 100% margin and let the fools declare at some point of time that we should be having a rational amount of profits, and that's the time the prices are going to crash and the demand is going to go up. So unless they do so, nothing is going to happen. So I don't see any kind of reasons as to why one should be holding State Bank, ICICI Bank or a Hindalco at this point of time. That money possibly can be used for other buying ideas, or you can choose to put in fresh money and buy other stocks, and don't try to average a State Bank of India or a Hindalco or a ICICI banks. ICICI Bank is akin to a PSU bank because of overexposure in the power sector, and thereby the NPA worries will be always there, and that's precisely why an ICICI bank refuses to move up. A shift into an Axis Bank and a shift into a DCB, a shift into maybe an IndusInd Bank might be much better proposition. You will see a bit of color of the money. Okay, these are the 2 questions I got in YouTube, and I suppose you are also getting some kind of updates every day in the Facebook. So the regular intraday types updates here and there it comes, and so you can follow that. I was talking about pharma, and we are talking about Wockhardt Pharma.
Granules we also get on Facebook and
Wockhardt Pharma. It's not an uptrend, but it's a bounce back. And that bounce back has happened in such a way that there are likelihoods of a move up. It's a likelihood of a move up. Now, how do you trade really? Trade in the sense like these kind of charting patterns suggest that you should buy dips. Now, Wockhardt Pharma is about 13, 16, 60, 70 types. Now, here the problem of Wockhardt Pharma on technical grounds on an intraday basis is 1392 to 1395. A better resistance is 1410 to 1422. So as long as it is not negotiating and taking out 1410, 1422, you can also choose to sell on the higher side and pick up intraday money. But at the same time, it's really taking a support of 1320, 1330, 1335. So that could be support area for bounce back on Wockhardt Pharma. So if you have a large trading range, about 100 rupees trading range, and you can try to trade with that, is it a fundamental buy? I don't think there's any reason to buy fundamentally. But if you look at Jubilant Life Science, that's pretty good, and it's about 380 types. It has taken resistance about 385, 390 zone. Should it retrace up to about say 360, then you could possibly put up a stop of 352 and try to buy a Jubilant Life Science. That should work in your favor. And then Lupin has a pattern which is suggesting some kind of a breakout in the offing. And if the breakout will happen, it should happen beyond 1950. So once you start trading above 1950, then a Lupin is a buy with targets of roughly 2050, 2090 types. Now, if you do not see that the breakout is happening above 1950, that means, why I say breakout? The breakout point has been 1950. It has closed around 1990. So we are broken out. That's confirmed. So retracements to be bought. And should it now try to reach about 2100, there will be huge resistance there. So possibly you can sell there and put up some kind of a stop. But it is something to be bought, and it is something to be watched during this week. Obviously, there will be hiccups during the week, and as I said in the early part of the program, for Dow and for America, interest rates and things like that. But still, you can take a chance into this defensive and all that. If I now talk about an overall strategy in the market, there are pockets of new momentum getting developed. Let's say granules. It's about 141 closing. It did a lovely breakout. It got stuck about 130, 32 for a long time and was always retracing from there. And that is taken out. So I would expect the granules to move up further, and this was a stock which was there in my magazine in this year's Borimala. And I had mentioned about why a good buy is about 65, 70 bucks. It really was lying there for a long time. Now it is in a momentum upward trajectory. So I would assume that the trajectory and the price momentum will to follow at about up to 165 types. So take a shot at this particular stock and try to buy on retracements, and I think it should do well. Of course, 147 to 150 would be one psychological resistance, because having moved up so much, it could happen that there could be some resistance over there. Fair enough. But then mid-cap ideas are good ideas to play the momentum as and when it happens. Okay, fine. Now what else is happening? I'm going to have my Haldia conference on the 4th of October, that is next Sunday, and move out of the city on Saturday. So people who are watching programs may access me at Haldia. Stock market things are like ideas are very simple. I'll give an example, a very simple example, that when I was about 20, 21 years old, and my father gifted me 50 shares of Glaxo in my birthday. Not that, it's very common with the Bengalis to have birthday presents of shares, but he was a person who believed in investments and all that. So he gave me, and it costed only 500 bucks. So when I see that price of the share today is 1.5 lakhs, then it makes sense that in 30 years, without doing anything, getting some dividend over the last 35 years, the stock has moved up and it's 500 bucks has become 1.5 lakhs. Now, these kind of long-term investment policies also should be adhered to by you for your kids and other people, so that you really can keep back something, and these things really don't cost. And I am too sure that even in 2015, if you are talking about the inflation factor and the gold factor, say, it might have done a bit better than all these long-term investments. But I still believe that 35 years back, if I had a piece of land bought, that would have fetched much more bigger money. That's because with the India's development, these kind of requirements are coming up, and land is in scarce supply. It doesn't get produced. It's just whatever it is. So while that is there, but the liquidity factor also suggests that you can't buy a piece of land with 500 rupees even 35 years back. So I think looking from here at 2015, and we are talking about 30 years from here in 2045, by which possibly your kid is about 40 years old or 35 years old or 30 years old, I think the gifting of stocks should be a good idea. And obviously what will happen typically is that it will work out as a SIP. Why? Because every year there's the birthday comes. Instead of spending a stupid amount, like one of my friend who's a promoter, not friend really, is like my chota bhai types. So every year I find that he, through me, books at Tolly Club, and then goes for a birthday bash. And I don't see really kids around in that bash. I see all the his friends coming for a drink and blah blah blah. Of course, these days he's also a film producer. And I told him that why blow up 3-4 lakhs of rupees like this? At least buy 1 lakh rupees of stock for the kid, and you'll find that he will benefit so much. At the time, his kid would be about what, 6-7 years old. So in the next 15 years, 15 lakhs of rupees invested would give him more than crore. So why not adapt that kind of attitude? My point in saying this is that there are social aspects to investing, and I'm trying to put a lot of pressure on the social side so that things that looks really good, and one would really appreciate having invested in the stock market instead of just take out some kind of money out of the birthday budget, and you could just take a resort to it. Ideas makes money. Chasing money doesn't make money. We do this thing as a wrong, but sometimes ideas fail. It takes time. I'm too sure. My idea about in 2004-05 on McDowell took a bit of time, but when it started performing, it was absolutely brilliant. So I had given in the last seminar some kind of idea regarding India-made India liquor IMIL segment, and that is being tracked and should work very well in IMIL. A stock in that context would be definitely a IFB Agro or a Pincon. Pincon is traded in Bombay Stock Exchange, whereas IFB Agro is traded in National Stock Exchange. These are two ideas which can really work in the next 10 years in a great way. IFB has a better brand. Pincon is a local Kolkata brand, but I'm too sure invariably this company is going to be taken over by someone big because their brand is doing well. And I have reasons to believe that they have not manipulated the balance sheet. So the balance sheet also looks very strong with the top line growth more than 50% and even the profit growth more than 50%. I've discussed this in my seminar. Whoever has attended that can refer back the video or the slideshows. But then I just wanted to say that this is a stock which can be looked into. We are entering the month of Puja, and then followed by Diwali. So there will be market is going to keenly look at how the FMCG sector starts moving up. So retail will start looking good. Okay, it started raining. Retail is going to look good, and Pantaloon retails and fashions all of a sudden came to my notice, and I find that in 1 year it has moved up by 90%. Not that I knew about it, not that I was tracking that, but what makes Pantaloon retail go up so much is something very. So on that basis, when I talk about garments and all that, I'm talking about Kitex garments, which has got exports with a few of the largest brands of the world. And Kitex is a company which is about 800 times price. Fundamentally, I do not see reasons as to why this price should be so high. But then I think the premium being paid by the market is because their buyers are the best of the brands of the world, and Kitex garment can be looked into in terms of trading idea from this point of time. It's about 800 rupees, doesn't matter, it can become 700 also. But it's an idea. I mean, one has to look at the stocks movement, and KITEX is the name, that's traded in National Stock Exchange also. So look at Kitex as an idea as to go long or buy several times, book profits also. But there's a backup support in terms of fundamental about this company, which suggests that, as I said, the price looks a bit expensive, but then still there are opportunities for making money out of this stock. Well, we discussed a lot of stocks. I believe very good, promising investment times are coming, opportunities are coming, and those should be taken into account. Trading-wise, yes, there are bouts of selling and bouts of buying. That is not what is going to change the topic. Topic remains that where do you invest? And I'll give you a couple of ideas to find out how they work, and we'll review that next week. Thank you for watching today's program.